You see, everybody talks about entries. Hardly anyone talks about this. It's the real reason that traders wind up losing. And it's probably the most important thing. We just should just get right into it. So everyone keeps talking about where do we enter, where do we enter. No one is talking about where should you be looking at this stopping before we start getting retracements. I'm going to show you when you come out of a trend what you should be looking for on that first move down. When does that start to happen? There's a couple different ways to look at this. The very first thing that you should be taking from this is when you stop hitting a higher high. So number one, anytime you come out of a 20-day cycle, if you count your numbers out, 20 days coming back, you'll note that this is clearly a what? 20-day high, and you're hitting 20-day highs. You even have people that trade these, and what they do is they short the first day that you're over a 20-day high that you're not going to break. But for us, looking at these levels, let's just mark that off. We can see Wick City here, Wick City here. And do we all remember what this special day was? This was the day Itchy came out and said to us what? Oh, I cut rates, and when he was asked why, he really didn't have an answer. And then since then, what has the market done? It's never been able to get above that. And what I like to do here is control bars. I talk about them all the time. You were in control all throughout here, and then we broke below this on that close that got us below that control bar. Since then, you had the reversal that tried to lift, failed, and then we got our bearish engulfing, broke. Guess where we're back to? Sunshine special day right here, where again, that was an FOMC meeting, and we're bumping our head. What I don't like is that you're slowing down, but you are rotating, which is good. Now, earnings tonight could actually take us up another level because of what's going on with some of these tech names, and we're going to dive into that. Super important what's happening here, and I do expect it to continue. Now, most important, when we know about this day, that control bar, and when we count 20 out, and you just start here and just go back 20 days. Whenever you hit a 20-day high or a 20-day low, you want to watch the next day. So obviously it would be a 20-day high here. I mean, it's not rocket science. You don't need me to count it. Then the next day would obviously be a 20-day high from there. And then you would just come here and look at this and go, okay, well, that's 68. And you just watch the numbers up here. On the open, you'd go 27 on the close, 25 on the close. You didn't do it. So that's a sign that you're starting to slow. On top of that, you're tying right to this. Now, it doesn't mean that the NASDAQ's going to follow because we are getting a divergence. But we have to look at that. The second thing that I do is after we mark those demarcation lines and we have our first inside day since this happened, we would note the size of these bars, and we would note that this one is longer, right? This one is shorter, and this one is shorter. That means you're running out of steam. But the great thing about dojis are uncertainty. If you flip it, you flip it. So that gives us pretty clear demarcation lines for tomorrow. And I think with some of the tech names that came out with earnings tonight and the way they're moving, I think it's going to be pretty positive for the market. But whether or not that affects the ES remains to be seen. What I like to do is just take a look at the ES and then just look at the RSI and go from there. Now, from my perspective, when we go back to this April 6th date, which was a pretty clear demarcation on the RSI, grossly oversold here, grossly oversold here, but then you can obviously see that this, even though it wasn't a possible divergence, it's pretty clear what was oversold here versus overbought, rallied right to that neckline, and again, you can see our key levels here. What does this mean for us, and what should we be doing about it? Well, you're overbought on the 4-hour. It's really hard to look at a 4-hour chart at any given time throughout history and not see this. And I'm sure you already see it without me doing it, but I think that this is important. So we're just going to spend a moment on it and just drop some levels right here. Let's get rid of that for a second because I'd rather drop them down here so you can see exactly what I'm talking about. And you can see how they align. It doesn't mean that you're definitely going to go down, but it does mean that when you get to these 4-hour levels that you're overbought. And usually, at best, you go sideways. At best, you're going to go sideways. And usually, that's not what happens. You usually come down a little bit over something silly, rebuild, and then go higher. And that's exactly what I think is going to happen here. If we go to the hourly, get rid of this for a second. And I'm going to clean all this off now. But I want to just, I guess I didn't have to announce it. I just could have done it. But if you see this level right here, see how you're lifting up? I know everybody's sad they didn't get the subscribe to the channel. 27.5% of you do not subscribe to the channel. and you watch for the past 30 days. So subscribe and click all notifications because these videos come out at different times and they are packed. But you see your negative divergence here. What I don't like is I have the higher high here and then I have the lower high here, and you see the confirm right there. So you're getting a confirm move, and people are like, do you really get into this level of detail? And the answer is yeah, I don't have a life, but I do like to trade. So you click on this and boom, look where we are. Got it? Get it? Good. So once we're at that level, and you can see how we already broke, it is what it is. People are like, oh, I don't use RSI. Well, you don't use gravity either, but it still believes in you. So it is what it is. It's there. And really all the RSI is telling you is the magnitude of the move is going lower as it's going higher. So you would realize that that is not realistic for that to happen, right? I mean, anyone would understand it's not realistic for the market to lift if the magnitude of the move is dropping. I mean, that would be silly to think that that would happen. But wait, there's more. You can go sideways. Here's what really got me today looking at this, is that as time went on, and let me just pull this back so that we can see it, once you got up in here, it started getting pretty ugly. And it started these pops over and over again, but look what was happening on these pops. Over and over again as they were working us down. So then when you tried to rally later in the day, see where that line is now? Look, you couldn't get over, and then you popped, and then boom, that was it. What I do like about this is the fierceness of how quickly you're getting oversold. So what my concern here is going over this is that people understand you could just sell down a little bit and work off the overbought super quickly and negate this and come right back. That is possible. It's happened before where you've worked these off. Take a look at this whole area in here. And you didn't know that we were going to have a day of liberation, which is exactly what happened to us here. But see how this has kept selling down the whole way? And he just kept sitting there. You can do that, and that would just be underperformance versus the NASDAQ. And eventually it works its way off and then goes higher. That's not what happened here, but you will find cases of that where this just kind of works itself down and it hardly drops. It just drops a little bit, like 100 points or 2.5%, and then it's like, oh, okay, now it's time to reload, and it goes up again. And that's exactly what could happen here. Now, there's some signs that that's not what's going to happen here. And I'd be remiss to just point out some of the things that are happening. So if you take a look here at the RSI and you look at that level, you need to hold this. You have a trend line here. And it's not your major one. You have a major one that's right in here. And you're not anywhere near breaking that. But if this breaks, I would think that you could drop down to that 40 level. I can open this up a little bit more. You could drop down to that 40 level and just be net flat on the whole market and kind of go from there. And I really think that's where you're heading with all of this. I do. I think that that's where we're going. I don't think that we're going to see this complete utter crash because a lot of people are already out of the market and looking to buy. And with where the VIX is, I just don't see it. Maybe 57, 70. I know we're spending a lot of time on this, but I think it's super important before we go any further. If we look at the Qs, you're seeing a lot of similarities, but you're seeing this continue to push, even though we're making these lower highs. Go and take a look at this on a 4-hour, and you can see you're grossly overbought in the 4-hour, up at 84. People say, I don't pay attention to that. That's fine. You don't have to. But here is March 26th, and then here is February 21st, where we first started getting liberated. And then you can see here on January 22nd, and then back here, and we know that this was Itchy's special day on the FOMC. And then you see back here on November 7th when we started rounding out, and that was after the elections. So it's not common on a 4-hour chart to be up here. Matter of fact, if you looked from, let's just take November, 1, 2, 3, 4, 5, 6, 7, 8 times that you've really done it. And I wouldn't even call this way over, but this is certainly over. You've been here 8 times and then you pulled back. You'd want to pull back before getting involved is really where I'm going with this. Because now you're at a spot where you're really not that far off and you're right back to Itchy's favorite level, which puts you right here, which is kind of crazy when you think about it. And the other part of this level, that's, if you guys remember this, that was that CPI number that came out right here where we had that negative CPI. And if you go and take a look at that, that's where you had all these attachments right here where you couldn't break. And that was a CPI number where it reversed, and then you just flip that right here. So after you played with that On Tuesday at 6 o'clock, we flipped, and then now we're rocking and rolling. So I do think you have the potential to get over it, but when we look at the hourly, you have the negative divergence. Watch this on the 5. You had this today as well, where you're hitting these highs, and as you're hitting those highs, this is going lower and lower. Again, what I really like about what it's doing and why I think it's going to be shallow and not deep, but we never know, and we're all only just one tweet away. But you see right here, see how you're holding those levels? See how fast it was over? It's like, oh my gosh, I got to get out. I got to get out now. That's that cat on a hot tin roof. That's nobody trusting anything that they're seeing. And that's what you're dealing with right now. This is super important to get. No one trusts anything. So what happens is today when they were bidding us up and we're trying to trade, all of a sudden all those breakouts are just getting hammered. And we saw that. So that's what's going on with the market. Super important to get that. We should go through the breadth before we get into some of these names. As always, subscribe to the channel, click all notifications. I do appreciate you guys sharing this. It does show up when you guys share it, so it does help greatly. And I am doing this to bring it up so that I don't have to run ads in between here. So you guys kind of make up for it that way so that you don't have to deal with ads because that's what the algorithm wants. So anyway, 67.3%. I don't know how you get 0.3% on a 50-day moving average in the S&P, but here we are. So you can see that right there, 50-day, 225. I go through some of this stuff fast for the people that already know what some of this stuff is, which is why I tell people that all these videos link together. And that means that I don't have to go over the same stuff over and over again. But 5, 20, 50, 200 percentages of stocks above their respective moving averages. Let's keep going. We're not over 50 yet. Once you get over 50 and you start closing over 50, that's exactly where you want to be. And we're heading there. We are getting there. What I like and what people are having a hard time understanding, and we're going to spend some time on it, the 200's rising, the 50's rising, but the 20's going sideways and the 5's going sideways. Why? Why is that happening? Very simple. Rotation, rotation, rotation. This is very healthy. This is what you want to see. And you're going to say, but wait, you just said that we hit itchy special level and we're going to come down. I'm saying that you're overbought and that you can pull back and that you have to readjust from that RSI. That's what I think has to happen. Nobody ever knows. But if you look at this, this is clearly telling you have rotation because it's impossible to keep going higher unless you're getting over 50s and 200s in here as this is going on, which is very good for the market. What I liked today was the panic that I saw when things failed. I thought that was super important. And this is very healthy what we see here. If we did the simple things, and we should do that for a second, we should go look at the all sectors for a second before we go any further. Drop this down, and what we'll do, we'll make that a line, and then we'll drop this to a 5-minute chart. And then we'll just go to the 12th. You can see up here what's going on. So if we come back here, this is 40 different sectors. I throw it on a chart, and it's just super easy for me to read. Well, what are they doing? They're dumping gold. They can't get out of gold fast enough. What are they buying? Solar, semis, crypto. Tech, China, XLY, XOP. I mean, it tells you what they're buying. That's why I like this so much. It'll tell you exactly what they're buying. And with the color coordinated, you can even go back throughout days and see it. So again, when you come back to this, you can even go back further and go, okay, well, let's just keep going and see what they're going to do for May. Well, solar, 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 then semis, then crypto. Nothing's even close. Super important that you see that that theme's continuing. So if you're saying, oh, well, where do we put our money? It's in those themes. What I think is most important is they're getting out of gold. They're getting out of gold and they're getting into tech and they're getting into the high levered, high beta sectors. And that's exactly what you want to see. That's exactly what you're looking for. Let's get to a couple key developments this evening. Now I'm going to rip this straight from the headlines. I just grabbed this right from Bazinga. NVIDIA back CRWV report jumps first quarter. Revenue jumps 420%. Backlog grows 25.9%. Following OpenAI shares hit all-time high. We'll get to it in a moment. The thing about this is not the 981 versus 859, but this is going to be the big news. This is why you're seeing NVIDIA at the time of recording this up a solid, geez, what are we up here? Another $1.50 after hours. What's super important about this is the beating was great, but there was an adjusted loss of $1.49. they're going to have to explain the loss. The company reported $1 billion in operating expenses. I actually think when you look at this, they're talking about how strong everything was. I think when you're on the call, they're going to talk in the calls at 5 o'clock, and you'll see at the time recording this that I have obviously not listened to that call. But I think it's going to be a currency or tariff issue. And I think when that gets explained on the call, it should be positive for the stock, but we still have to see. After hours, when it came out, you just lifted accordingly and did exceptionally well. Super important always just to mark off that 4 o'clock level and just see where you're at. Broke out, lifted, retest, broke out, went. I mean, not really much to say. Mark your key levels and watch. And the other thing that we like to do here is just drop a VWAP directly on the movement. And you could see at 5 o'clock, you're starting to see some weakness where people are saying, I don't really care what they have to say. I'm going to take my money and toys and go home. Maybe that's the right move. Maybe it's not. They still haven't said anything at the time recording this. So we'll see where that goes. The other one that to me was even better, candidly, was Cisco. It wasn't even, quite frankly, close which one was better. Cisco was just all around a beat and good solid guidance. And these names like Cisco and IBM, they benefit greatly from what's going on right now with the UAE and Saudi Arabia. I can do that in another video. What I would say to you is this. A lot of people with a lot of trades off the open, they faded. What I would take from today is just take a step back and look at this stuff from 34,000 feet. Because sometimes you can't see the forest through the trees depending upon how you trade. So you have to compartmentalize. As someone that does different kinds of trades from day trading, swing trade, long-term trading, if you're swing trading this, you had a great day. If you have a long-term trade, you have a great day. If you were day trading and you're buying it, you might have had a problem later. My perspective on it is that you rallied and then you just had no oomph left. And I think you're running out of oomph because you're overbought. But if you were to look at this, you had a great day. If you were to look at NVIDIA from where it closed, and I close off my 1400 levels, and you look right here, you closed at 130. You're at 136 after hours. You closed at 135. So you're up another 5 points. I mean, you look at the past couple days from Monday, 122 to here, you're up $12. I mean, there's not really a whole heck of a lot to say here about it. It's absolutely crushing. So I think you have to look at this stuff in perspective to what you're dealing. And I do think you're going to have some bumps along the road. Now, tomorrow we get PPI, and we're going to cover that public in the public pre-market live. That goes around 8:15 or 8:30. I try for 8:15, but it's been around 8:30 lately. I think this is super important to get. I think it's super important to look at AVGO and look at these numbers and going, okay, look, inside day. Okay, this is what we have, and let's see how this goes. But you've come a long way in a very short period of time. And you have the people over here that are telling you that the sky is falling. And you have the people that actually know what they're talking about that are looking at, the ones that actually commit capital that are saying, yeah, the VIX is at 18. You had your opportunity when this was up here, just like you had your opportunity here and all the way back here or here. And if you didn't do it, you missed it. But don't think that it's just going to magically, just because you missed one opportunity doesn't mean there's not another one. Just go on and go find the next one. See, a lot of people will I'm going to go over this. We're going to do it. Because this is where people really screw themselves. And excuse my language, but there's really no other way to say it. Where people screw up is now they convince themselves that the market has to go back down because they missed it. The market doesn't owe you anything. The market does not know you exist. What you have to do is go find the new thing that's going on. That new thing might be CRWV. It might be this AI resurgence that you're seeing happen right now in the UAE. You might be on the other side of that. And you might think it's going to come in. But you have to go look for the new thing. You already missed the old thing. Go find the new thing. That's it.